tonight we have the following people, all right? And this is Carmen Balber from Consumer Watchdog. And they're the people you see on TV that talk about the insurance industry a lot. And that's how I knew to contact them, because they're Consumer Watchdog. All right? Now, this is Ann Russell. She is president of the Greater Los Angeles Realtor Association. And that is important because I'm assuming a lot of people here own a house. And if you own a house, the insurance issue is going to be affecting every bit of homeownership as the premiums go up, down, uninsured, underinsured, overinsured. If you want to sell, refinance, remortgage, do anything, you're going to need a real estate agent, and she's going to be able to tell you what effect this will have on her. And that is my phone. So let's see. Oh, it's my old friend, Scam Likely. Okay. So that is why she is here, and I know that all of you will have questions about that. To that end, as well, I'm going to let you know that we also have government people. I got cards because Fran, God bless her, arranged the insurance department, and I didn't know how to get a hold of them because, as y'all know, Fran still doesn't have internet in her Asheville, Carolina suburb home, although she's very excited they have running water and electricity now. So this is Rob, and hold on, I can do this. Obedoza.
You got it. Yeah. Perfect.
See that? And this is, I got two of his cards and not one of yours. Julia Svetlana Juarez. Julia, he said Julia, so I'm not going to say Julia. Julia, and I love that Svetlana Juarez, okay? It's just, I don't even want to know what was going on in your house. Okay.
That's right.
So now, so all of you understand, all right? Bryan, that lovely videographer, when you speak, please come to the podium, all right? So that he can videotape you because he loves doing that, and we appreciate it. Now, so there's that. Number two, they're all going to tell you what they know and how they know it. When they're done telling you what they know and how they know it, we're going to have a question and answer period from the audience for the panel. So save your questions, write them down if you're afraid you're going to forget them, because Lord knows I'll forget the minute I walk out the door. But save your questions, and let's do this, and let's become aware of what we're facing. Thank you for your time. I'm done. No more jokes. All right, so would you like to go first?
Sure, why not?
Why not?
Why not?
First, second, third, and fourth, because that's the order you came.
Well, good evening, everybody. I know this is a issue facing all of us right now. How many of you out there are homeowners? All right. How many of you have had to change insurance in the last minute or two? Right. Me as well, right? So this is a hard issue right now. But I want to start by saying this isn't the first time this has happened in the state of California. I'm sure the two of you will back me up on that. This sort of happens in waves. Our legislature tries to protect us as consumers and tries to keep the insurance companies from raising their rates too much and too quickly to hurt us, puts checks and balances on them. Then something happens like Paradise, and they all get nervous, and they can't get enough, and they walk out. So farmers, State Farm, so many of us have gotten letters in the mail after many, many years saying, we're just not writing in California anymore, bye-bye, right? But they're not gone. They just go away for a while until the legislature cries uncle, says ouch, releases the restrictions, makes some deals with them, which is exactly what's going on right now with our insurance commissioner, Lara, is putting in executive orders and a sort of a sustainable event to try to help the insurance companies raise their rates with the reason, and then bring them all back in, and then we pay exorbitant fees. And this goes on and on and on in waves all the time, so we get that. I mean, I'm going to tell you some stories about me, because I think it's important. I want to say first for our industry, it used to be that when people bought houses, we as realtors would say to them, okay, they do all the other things they do, get their loans, make sure everything's in order, and at the very last minute, they'll call their insurance agent and write insurance, and within 2 or 3 days, they'd put something on the property and they'd close the deal. Today, when they find a house, or even when they just start looking with us, we say, where do you want to buy your house? And if they say to us, we want to buy it somewhere in a brush area or a fire zone, we say, well, the first thing you have to do is look and see if you can get insurance. That's the first thing, full stop. I used to be a manager in the Pacific Palisades, and then there was the Palisades fire, and everyone stopped writing insurance in the Palisades. Now, Fair Plan, which is supposed to be our stopgap, is not very good for people whose houses are over $1 million because they just don't write enough insurance to cover it. So we had people who just had no insurance whatsoever. And I remember when that happened, which was a couple of years ago, Lloyd's of London came into write, and I remember that an insurance policy that at one time would have been about $10,000 a year, they called to ask, and it was $85,000 a year to cover the house they wished to buy, which of course adjusted the kind of offer they would make on that house, wouldn't it, right? Right. Myself, I had a burglary, and I live in the Hollywood Hills, not very far from here, up off of Barham in the hills over on the Mulholland Hill up there just a year or so ago, and lost a lot of jewelry, and talked to my insurance agent, and she goes, don't file a claim. And I said, excuse me? She said, no, you can't file a claim. If you file a claim, you won't have any insurance. I said, well, what is insurance for? I'm thinking to myself, my God, right? Well, I didn't file a claim, and anyway this year, my insurance went up triple. I didn't file a claim, but it went up triple anyway. I have property in Florida. We are not the only ones. I have property in Florida literally 1 mile from the eye of the hurricane last night. My insurance carriers last year, because of Ian and the other insurances, dropped our coverage. And my broker said, okay, we've got this other person writing insurance for you. Great. Well, 2 days ago, as Milton was coming in offshore, I said, I better sign up for this insurance now before it hits, mustn't I? And so yesterday afternoon, I went online and accepted the policy and wrote it and got the number 4 times what I was paying the year before. What are you going to do? This is where it is. There's nothing we can really do about it except be ready for it. Now, we do have things we can do for our homes to help, quote unquote, mitigate these exorbitant fees. There are now things we can do to fireproof our homes and house harden our homes. Are all of you aware of the things that, you can put a different kind of roof on, you can close up your eaves, you can take your brush, that's, trees and things that are close to the foundation of your house, you can move them back 3 feet, you can move them back 5 feet, you can move them back 30 feet and put in, all kinds of things. But I was talking to Carmen, who said that even when you do all these things, the mitigation numbers that the insurance companies give you are not very much less than what you're actually going to spend to do the house hardening itself. So, what do? I think the only thing we can do is kind of grit our teeth and bear it. Hopefully we can afford to pay the insurance costs that are coming upon us. There's not much else we can do because we're at the mercy of our insurance companies, and that's all I can say right now. I hope our insurance people can give us some good ideas of how we can fix all of this.
Just so you know, it's another joke coming. But my definition of insurance is what you have to feel good until something happens. I'm just saying, right? You're in a car accident, no insurance. Until something happens. So, Carmen Balber from Consumer Watchdog.
Thanks, Missy, and thanks for the invitation. Hi, everyone. Thanks for coming. So I was going to start with something else, but we were having some conversations at the beginning about what's going on and what insurance companies are doing to people, and I think I would like to start with that. I think Missy said I'm the executive director of Consumer Watchdog. I should have started with that. So one of the biggest problems that consumers are facing right now, one of the biggest reasons that people are either unable to access insurance or can't afford the insurance they're getting, is because the insurance industry is relying on secret technology in order to decide who pays more or who they'll sell to at all. And this is a phenomenon that is happening with more and more insurance, not just wildfire insurance, not just the folks who live on this side of us, but also the people who live on the flats in Hollywood as well. Insurance companies are doing things like relying on third-party companies who take aerial imagery of your property and then send you a non-renewal notice, and when you go back to them and say, why did I get this non-renewal? They say, oh, well, there's mold on your roof. But if you can force them to give you the picture, it was actually just a shadow of a tree branch that you're happy to cut off. Or they tell you there's too much clutter around your house. But again, if you can get the picture, you find out that the satellite went over your house the day you were cleaning out the garage. And so that's an example of how even non-fire related technology is increasing people's rates or making it hard to get insurance. It's even worse in the fire situation we're in now, because insurance companies are using secret algorithms, they're climate catastrophe models that are made by Wall Street firms and Silicon Valley companies to predict whose house is more likely to burn and whether or not they want to cover you at all. And there is no transparency in these models that they're using to decide you pay 10 times what I pay, because they're owned by these private companies who are unwilling to tell us what goes into the formula, how they weigh all those factors, what happens with the math to get the number that they spit out, or to get the decision that you live in an area that is uninsurable. Insurance companies are also not disclosing to the public, to you and I, the impact of those models, and often even when they're using this aerial technology, you have to prod and poke to find out that that's what they were doing. And this use of unaccountable technology is really wreaking havoc in California because we can't see what's inside those secret models. We can't see what those third parties are providing companies. That's a big problem that we're facing here in California. And we're not going to have affordable insurance rates if we continue to allow the insurance industry to rely on unreliable information. And we can't know what's reliable if we can't see it. Our founder wrote a ballot initiative that was passed by the voters in 1988, Proposition 103. You might have heard of him, Harvey Rosenfield, if you've been around a while. And that law tried to tame what was a wild west of insurance at the time. Insurance companies just charged whatever they want, you had to live with it. The law said that insurance companies have to come, open their books, justify the prices they want to charge, and get approval from the insurance commissioner before raising rates. It also said everything that goes into an insurance price has to be transparent. They have to tell you what it is. And it says both members of the public and groups like ours can participate in rate oversight to hold the insurance industry accountable. And that law has been successful for a really long time. In the auto insurance world alone, it saved drivers $150 billion on their rates, according to the Consumer Federation of America. It did one really important thing for auto insurance. It said if you are a good driver, you are guaranteed coverage. Every insurance company in the state has to sell to you if you're a good driver. But it didn't address home insurance, because at the time, people weren't having a hard time getting home insurance. We were not in the middle of the same situation that we are today. And that is one of the very first things we can do to make sure people get access to coverage again. We need to mandate that home insurance companies cover everyone who does the right thing and hardens their home. Because we have new state guidelines that the commissioner approved that say if you take all of these steps, your house is less likely to burn down in the fire. The research from the insurance industry and their friends says that those steps make it 75% less likely that your house is going to burn down in a fire, and the insurance industry is blaming fires for a lot of these problems. If we had a mandate, just like we have in auto insurance and just like we have in health insurance, under Obamacare, health insurers also can't tell you they won't sell you insurance, then we would be able to guarantee Californians have access to coverage. And that is something that we both need your lawmakers to do, because the insurance commissioner can't do it on his own, but we would love the insurance commissioner's support for that as well, because we are not going to get Californians insured again unless we have that protection. And, in the interest of time, I might skip a lot of the other solutions I have and bring them up as, folks raise questions, et cetera, but I want to preemptively address something I think Julie is going to say, because the commissioner has, as Ann mentioned, has decided that the insurance industry's arguments about what's wrong in California are right. And he has decided to give the insurance industry what they want in the hopes of coaxing them back into California's market. And it's like kind of a capitalism 101 argument, right? That if the insurance industry can charge what they want, they're going to come back into California. If we just give them all of the deregulation, all of the changes in the law that they want, maybe they'll like us again and come back in California. And it could work, but we don't think it will, because everything the commissioner is proposing was already tried in Florida. Florida rates are 2.5 or more times as high as what they are here in California. Their insurer of last resort has 4 times as many people. They still don't have insurance companies, and folks' rates are going up. And so that solution alone is not going to bring the insurance companies back into California. It's not going to solve the problem. That's one of the reasons we think we need a mandate. Now, to his credit, the commissioner said, well, I'm not just going to give them everything they want. There's going to be a quid pro quo. Consumers are going to get something out of this deal. I'm going to make them sell in California again if they want all of this deregulation. If they want to take advantage of all these tools, they're going to have to commit to sell in risky parts of California again. And he has said that insurance companies will have to commit to covering 85% in risky areas of what they sell in the rest of the state. So if you sell 10% of the insurance in the state of California, you have to sell 8.5% of the insurance in risky wildfire areas. The problem is the text of the regulation the commissioner wrote does not say that. It gives them that option. They have another option to choose a 5% increase. They have another option to choose an alternative commitment. And then they don't have to show they've met those commitments for 2 years. When 2027 rolls around, if they say they made a reasonable effort but can't do it, they get a pass, the goalposts move, and no one in California has insurance again. It would be great if we could trust the goodwill of the insurance industry to come back into the market, but we don't believe we can, which is why we think that mandate and a host of other things can really help stabilize the market in California until things calm down. So I'll leave it at that and let Julia talk.
Fair and balanced.
Do you?
Julia.
I'm sorry.
Juarez. I'm sorry, I'm just, Julia Svetlana. It's just not working for me. But, so, thank you for that. But Julia is going to explain what Carmen was just talking about in other terms.
Thank
Right?
you. All right. Well, thank you everyone for being here. Really appreciate it. I know that in an evening after work, you might just want to be home, and you're here, so I truly, truly appreciate you being here. The Insurance Commissioner Lara, since he got elected in 2019, one of the very first things he did was he said, we are going to go to every part of this state and find out what are the biggest issues that we are having with insurance and how do we handle this? What do we do? And so these conversations, being here with you, has informed everything that we have done in regards to insurance with Commissioner Lara since 2019. And so I just want to thank you for being here, and I thank you for preemptively, thank you for the comments that you will make to us so that we are able to learn from that and then take it back to our colleagues as we are working for the improvement of the insurance market all over the state. California is the biggest insurance market in the country. We have $413 billion worth of premium, and we are only second in the world to China. So that means that insurance is alive and well in California, and in many other parts of the world, that insurance companies are conglomerates. They are not just these little businesses. They do business all over the world. And the things that we have seen in California, we have seen the worst fires in all of our history within the last 10 years, and so we have seen a huge amount of losses, and the homeowners insurance industry or market here in California has seen the biggest losses we've ever seen. So not only in California, that is happening in California, but that is happening everywhere in the world. Every so often you hear about, Australia, about just all these different places. So when we started looking at what is happening, even before the pandemic, remember the pandemic was 2020, 2021, we were hearing from folks in Northern California in areas where they were starting to get dropped. And so a lot of people were going to the FAIR Plan. So the very first things that we did was make sure that the FAIR Plan was going to be able to cover enough of what is needed. The FAIR Plan is the insurance of last resort. It is very much so the one thing that if it was created after the Watts riots, because nobody wanted to insure those homes in South LA, right? And so it was just created for you to use for maybe 1 or 2 months while you looked for other insurance and you were able to find it and get yourself on your feet again. It is the way that it is. The legislature created it, but it is an insurance industry product. The insurance industry is the one that is in the board of the FAIR Plan, and they are the ones that make those decisions for the FAIR Plan. But it is still something that we have available in the state. So when we came in, the homeowners were able to use up to $1.5 million worth of insurance were able to buy from the FAIR Plan. FAIR Plan only covers fire. So you still have to buy a difference in conditions policy. So Commissioner Lara asked the FAIR Plan to increase their availability to $3 million for homes. And for businesses, it was $3.5 million, so now it was $7 million. So as we are seeing then everything that is happening with insurance, and as people are having a hard time because we are seeing a lot of drops, we are seeing that the major companies are basically the way that our system works. We have 12 companies, which I am sure that if we all sat here and tried to figure out which ones are they, we will all be able to name them right away. But 12 companies are responsible for 85% of the market in California. So that means that they have the biggest risks, right? So can you all take a guess as to which one is the one that has the biggest risk from everything that you hear on the news? Anybody want to yell out a name? No? State Farm. State Farm has 22% of the market. The next one is Farmers at around 14%, and then everybody else comes in at around 6% or so. So you are looking at the 12 biggest companies having the biggest risk in the state. They are trying to figure out their books and making sure that they can get rid of as many policies as they possibly can. So that's why you're hearing from, if you are a State Farm, family in that sense, there is, you of course must have, heard that they are just basically trying to get rid of a lot of their policies. So people are saying, well, it's because they're not charging what they need. And so in some areas, we go to some areas and they tell us, just let them charge whatever they need and we'll be fine, just get out of their way. We can't do that. We can't do that very specifically because we have to make sure that whatever they are charging is fair, it is non-discriminatory, and that you are able to get the services that you need from them. At the same time, the commissioner needs to make absolutely sure that the market is viable, and that if there is a major disaster, that they are able to pay out their claims to you. So those are, we have to make sure that we have that balance. So looking at what we have right now, so all of these companies have requested rate increases. Now what we have seen is that in the past, for the last 30 years or so, when insurance companies will come to the department and say, we would like to have a rate increase, they would request for a 6.9% increase because then they wouldn't have to go into hearing because they were charging more because they wouldn't get an intervener to come in and look at their books. they would be able to, just get the department to review, so they thought, right, and then get going. When we would look at that, we would see this company needs 20% increase, but they're only asking for a 6.9. Well, we're not going to tell them, you go ahead and ask for the 20%, we'll give you the 20%. We wouldn't do that. So we would give them the 6.9. Guess what happened the very next day? They would apply for another 6.9. And so then it was just this constant, and so the department for years was just going like this. So what Commissioner Lara said to the insurance companies was, ask for what you need, and if it makes sense, if it is actuarially correct, we will work with you to try to figure out what makes sense for the consumer and for the market, and so we will work with you on that. So now you see, that's why you hear such and such as having 12% increase, 30% increase, and all of that. Now, if you are a homeowner and you hear, let's say State Farm is getting a 35% increase, they're going to increase my rates by 35%. Not necessarily, because what that means is that they are going to be increasing their rates by 35% in their entire book of business in the state. That means that it's their entire book of business, so maybe in areas where there is no risk or very low risk, those people might get a discount because they have no risk. But those folks that live in very wildfire-prone areas might get a 200, 300, I have heard a 700% increase. So these things are happening throughout the state. So this is the lay of the land, so that this is what is happening. So that's where we are at right now. We're in the middle of this crisis, because it truly is a crisis. So some people will say, mandate that the insurance companies have to provide insurance for everybody, regardless, or well, insurance companies are not they're not utilities. They don't have to sell insurance. It is a business, and so because it is a business, we do not have the ability to mandate it. The commissioner does not have the ability to mandate it. When the Northridge earthquake happened, do you guys remember the Northridge earthquake? That was quite a little movement there. And when that happened, we had a huge amount of loss. And so all the insurance companies kind of went into a state of shock. And the legislature, of course, trying to figure out, okay, how do we fix this? How do we fix this? Let's fix it quick. Then made it into law that insurance companies must sell insurance. Guess what insurance companies did? 95% of them completely stopped selling insurance. 95%. So at that point, we had to create the earthquake authority, right? Which is, the state program that we had to create so that people can buy earthquake insurance. Do you know how many people in California have earthquake insurance? About 10%. It fluctuates from 10 to 13% of the people in the state have earthquake insurance. So what happens if we're trying to figure out how do we work with the insurance industry to find solutions that we can all work with. So when they come to us and they say we have way too much risk, we can't handle that risk anymore, what can we do? So Commissioner Lara gathered all of the agencies and all of the groups that deal with wildfires and said we need to come up with very specific things that people can do. And so that's where the Safer from Wildfires framework came from. We have copies of those sheets in the back so that you can have some of that. But basically what it is very specific things that you can do to mitigate your home. And so if you do that, the commissioner did went along with if you take care of your home, do those mitigations. Insurance companies must take that into consideration when you are doing your renewals or you are working with them. Now there was the whole point of you will be able to then get some type of discount for the work that you're doing that. However, at the end of the day, the whole point of the Safer from Wildfires is for you to be safer, for you to not lose your home, for us to not have so many losses, right? So we understand the FAIR plan has the mitigations, and you can get those discounts right now up to, is it 20%? Up to 20%. And so the FAIR plan is you doing that. Most insurance companies have already done all of that information, and you can get that. The other part of this of these rules was that if an insurance company comes to you and says your wildfire risk score is too high, so we have to drop you now, or it's too high, you can then ask. You would normally ask the insurance company, why is it okay? How did you come up with that number? Tell me what this is, and how do I do? What do I need to do? Insurance companies would say to you, that's proprietary information, and we can't really share that with you. Now, what good does that do, right? It doesn't. It was something that they were making up. We wouldn't know. So what the commissioner did, along with the Safer from Wildfires framework, was actually create it so that we now have, when an insurance company tells you your wildfire risk score is too high, they're able to then come. You're now able to ask for it. Tell me what it is. How did you come about that? And now you have the ability to dispute that. So you're able to come back to them and say, I have done this, this, and this. My house is, we have done all of these different things. So you can dispute it. If you have an issue and you can't, the insurance company is not getting back to you, or the insurance company does not take that into account, you can contact the Department of Insurance. We have an 800 number, and we promise you people pick up the phones when you call the 800 number. And they, if by chance everyone is on the phone at the same time when you call, our callback time is 1 minute. So we will call you immediately back, and we will then be able to walk with you through your policy and figure out what the issue is, and then we are able to be a conduit between you and the insurance company to try to come to a solution for your issue. So that was the first part that we did. That was done last year. So of course, insurance companies keep dropping, and no movement was happening. So Commissioner Lara did come back to the insurance companies and say, okay, how can I work with you to figure out, how can we fix this? So insurance companies, normally the way that they drop people would say, this entire zip code is not good, so we're just going to get rid of everybody on that zip code. So when we're looking at catastrophe modeling, basically what that is looking at, allowing then insurance company to use whatever science they do to be able to look at a parcel specifically. So they're able to look at your parcel and figure out, okay, look, you have cleaned up your area, you have all of these different things. So then we're going to charge you, whatever it is that we're going to charge you because of what your particular home looks like, rather than a swath of what everybody gets, right? So at least in that sense, we're going to be able to do that. So we have been working on regulations for that this entire year. The commissioner was able to get the governor to support all of the work that we're doing with that, and so we are very much so trying to make sure that whatever it is the regulation is that we are looking at, that everybody is going to be able to look at your particular parcel. The Safer from Wildfires framework is very much so your home, your particular home, that's safe. Then there's 6 things that you can do. Your immediate surroundings, so looking at your particular, bushes or whatever it is that you might have there. And then there is the community part of that. And so what that is so that it's you can become a fire-wise community, or I always get that mixed up. Fire risk reduction community. Thank you. So it's a fire-wise community or fire risk reduction community. And what you can do with that is, and the idea behind that is, if a whole community then works together and cleans up their entire areas, then you can figure out what area, there's a home that nobody's doing anything about. Maybe there is somebody that is elderly that is unable to take care of it, and then the whole community comes together and helps to bring that up to speed, right? So that's the idea behind that. The other part of that, of the community it being involved, is that if you are a FireWise community or fire risk reduction community, you can apply for grants. We have a lot of money that has been invested into Cal OES and the fire departments, and so that we are very much so looking at how do we make sure that those communities that are working together to clean up their areas have the resources to help each other out and make sure that their homes are safer. So that's the other portion. So what the sustainable insurance strategy does is make sure that first and foremost that your insurance companies will be able to look at your home in particular, then by using catastrophe modeling. Then the other part of that is, because as I told you before, insurance companies are conglomerates, they have to buy reinsurance, right? Insurance for insurance companies. So then the other part of that is when they are looking for reinsurance throughout the world has been insane, going up and down and just out of control. They are not regulated by anybody. And so a lot of the insurance companies have lost have been downgraded because of how much risk they have, and so because of that, their reinsurance rates have gone off the roof. California is one of the only states that don't allow insurance company to take their expense on that into account when they're applying for premiums. So what they're doing, the commissioner is doing, is working with the insurance companies, working with the with the reinsurance and parameters, looking at everything that we can potentially look at to try to figure out how can we then get a number for reinsurance for California risk only. If we can find what the risk for California is alone, and then if you are going to then take into account how much you're spending on reinsurance by only showing what you would be spending because of California only risk, then you'll be able to then use those numbers to try to figure out how much how much you're spending on this to be able to cover everybody in your books. So all of that, that is the other part of this. So catastrophe modeling, reinsurance. Then the other part of that is we are working to modernize the FAIR Plan. The FAIR Plan, I told you that it was as of 2019, they literally had maybe like 5 or 6 employees or something like that were actually working on all of this, on all of these things, and they were not equipped to get as many policies as they're getting right now. Throughout the state, the FAIR Plan is now up to almost 4% of the entire book of business in California. That means the FAIR Plan has just increased tremendously, and they were not prepared for the amount of people that they were supposed to be doing. So we are working with them to help them to make sure that they are modernizing, that they are able to provide the services that they need. Maybe some of you have been trying to get a hold of the FAIR Plan and you are not able to do so because they don't have people picking up the phone. So what we are also doing is, as the Department of Insurance, when you are having issues with the FAIR Plan, call the Department of Insurance, and we are able then to communicate with them to help you with your particular policy. So all of those things we're working with. The commissioner was able to get the FAIR Plan to increase the commercial policies that they sell up to $20 million, because we know that HOAs in particular need a lot more than $3 million, and so we have increased that to $20 million. The problem is in California, some HOAs that are newer HOAs or have bigger footprints need more than that, even more than 20 million. So what we're working with them on is to try to figure out a way that we can do 20 million per building, so that they are able to cover that up to 100 million, while the insurance market is getting back on its feet and getting back up to speed. So ultimately, that is the whole thing. The expectation is then that the insurance companies then will now be able to have to do 85% of their of those areas where we have the biggest need, the biggest risk, and the biggest amount of people who are in the FAIR Plan. So basically getting people out of the FAIR Plan. So the question about 85%, we also have another section that is 5%, or we can work with the insurance companies. The reason we have that is because we have insurance companies that are very small, that are very niche, and so those companies that don't have that much policies, then we are able to work with them to make sure that they at least are able to provide the 5% in that sense. So that's the reasoning behind that part of the regulation. So that was a lot of information. I know, I'm like, some of you are like glazed over, but I want to make sure that you are aware of everything that we're doing and how it's working. Please know, government, as you know, works very, very slow, but we are actually doing our very best to have all of these things done by the end of the year. So the expectation is that by January 1st, the department we have hired actuaries, we have hired everybody in place, having everybody in place so that insurance companies then will be able to bring in their new applications for their premiums and showing us what they're going to do by January 1st. And then the expectation is that we should be able to get all of this done within the first 6 months. So by mid-2025, we're expecting a lot more business to be available for you. So bear with us. I know it is hard to do when you're getting increases, but please know that we are doing our part, and we're going to be available to you to help you in your whatever issue that you may be having with your insurance company.
Thank you, Svetlana. All right, so now you're not going to believe this, but somebody that was supposed to be here tonight was late because they were looking for parking. Who knew? Who'd have thought it? So I'd like to introduce Robbie Stanberg. From he's going to tell you the correct way to say it. From Rick Chavez Zabor's office. He's our local assembly person who will be able to tie all of this together because it is his office's job to work with all of these people to make our lives easier. Oh, wait a minute, hold on a second. I'm just talking government bureaucracy, and so I just needed something to laugh about. Come on up here and tell us what you're doing. Oh, I have to go this way. I got you.
So I mostly just want to introduce myself. My name is Robbie Steinberg. I'm in Assemblymember Zabur's district office here. I cover the Hollywood Hills and Santa Monica for the Assemblymember. I just want to make sure you have my contact for any issues that our office can help with. So I have a set of cards I can give out, and I can also, I think my email and also photo was sent out to everybody. So if anyone wants to get in touch with us, we're more than happy to. I actually think that the Commissioner's Office is the best resource to talk about this, but I just wanted to make myself available if there's any questions that kind of connect on a legislative level to what the Commissioner's Office is doing. And I know the Assembly member has been very involved in the insurance issue. We actually had a meeting in our office very recently. And I've actually had the pleasure of working with Rob before. But anything that we can do, I don't know if I can quite tie it all together. That was a tall ask. Yes, but I do want to make myself available. So I'm going to take my seat again, but if there's anything I can do to answer any specific questions regarding the Assembly member and regarding what we're doing in the state legislature, it'll be my pleasure.
Now, for those of you who don't know, this is the president of our organization. His name is Baby Boy. And he talks a lot less than I do. So now, what?
He's sliding.
It's fun for him. He's a kid. So now, for your questions and each of these people, so whoever you direct your question to, will be able to answer it. So now, I asked you all to hold them, so let's go. Everybody all at once. Okay. All right, that person can go. Yes.
I mean, I can just introduce myself
Yes.
as well to the group,
No,
just so you guys know. So yeah, I'm not going to repeat a lot of what Julia said. I'm also with the Department of Insurance. My name is Rob Obedoza. I am the area representative for the Department of Insurance for pretty much half of LA, along with Ventura County and Santa Barbara County, meeting with communities and homeowners such as yourself and listening to your feedback and understanding how each community has different challenges and that require different solutions. Again, I've met with Robbie, and good seeing you, Robbie, because I owe you some emails. I know that, so I'll be contacting you soon. But I'm also here as a point of contact for your guys' neighborhood. If you have any insurance-related issues, any questions, my contact information is here. They'll be able to send it out to everybody. I'll try to have some solutions for you for any questions that you might have, or be able to find solutions for you in any way that I can. But also, I also want to say that, with a lot of the changes that are coming up with the Department of Insurance and going on with the commissioner, that a lot of this is like public information up for public review, and I produce some of the Zoom hearings and the Zoom presentations or the workshops that are done for public review of some of these changes. And when I saw Carmen here, I said I recognize her, because even though I've never met her before, because I've seen her providing public feedback at each one of these workshops. And it's not just organizations like Carmen or other organizations that are available to provide that public feedback. We invite every homeowner and every resident to look through that information, provide public feedback in our next hearings, and let us know how you feel about some of these changes and some of your thoughts on that. So I'll be sure, when those things come up, to let your organization know, and I invite you to come and provide your public feedback and let your voice be heard. So again, I'm Rob with the Department of Insurance. I'm your point of contact. So.
Questions? Ida?
First, do all of you have enough cards to leave it there for every one of us to have? The other question I have for Carmen, when you say that, can there be a proposition or something statewide that mandates the things that you were talking about? Does that help us? And therefore, does it not help if we have it, will more insurance companies leave the state? I mean, how do we balance that, and can we have such a, I don't know, what do they call them?
Initiative, proposition.
Yes, an initiative.
So I hope we don't have to go to the ballot. That takes a lot of money and a lot of time and a lot of resources, but I bet you everyone would vote for it, because people are having a hard time getting insurance. What we can do instead is go the route of the legislature. This is something that the legislature can enact by statute. Julio was right that the commissioner doesn't have the power to mandate this on his own, but we would love his support for this idea. And I think we've seen from our experience in auto insurance, from our experience with health insurance, that this is a policy solution that can work. We're also the largest insurance market in the nation. And if we tell insurance companies, if you want the privilege of selling home and auto insurance in California, you have to cover people who do the right thing, not a person who builds a log cabin on the top of a mountain and refuses to protect itself, but someone who's being responsible, then yes, this is a policy that can work. And maybe, one of the things I didn't waste time on before, but maybe I'll just spend 2 minutes talking about the realities in the market and what the insurance industry is claiming versus the reality. Because the truth is, home insurance companies are not going bankrupt in the state of California. If they were really literally on their last dime, then maybe we would have a problem putting a mandate in effect. That is not the case at all. Insurance companies, specifically home insurance, is more profitable in California over the last 2 decades than it is across the nation. We look at a measure that is, all the money they take in, all the costs they put out, plus their investment income, which is really critical to insurance companies, and they are 3 points higher than the national average over the last 2 decades. And that includes those 2 massive fire years when they did, yes, lose a lot of money. But what they don't mention about that is that the utilities repaid the insurance companies billions because they were responsible for a bunch of those fires. So Edison paid for the Thomas fire. PG&E paid $11 billion for the Camp Fire and some of the other northern ones. So the insurance industry don't cry them a river, is all I'm saying. So the reality of insurance companies' finances is not what they would have you believe.
We live in the Oaks, literally 2 minutes from the fire station. There's a fire hydrant in front of our house. We're with Travelers. We still have them. We got a letter from Travelers saying we had to do a list of things, pay an inspection team to come out and sign off on it to let us know if they would renew us for the next year. I'm really not happy about paying $100 for somebody to come out to tell me that I should be able to have my insurance. The problem I have, I can remove and replace the gates. My neighbors and I share a wooden fence. He doesn't have Travelers. He doesn't want to remove the fence. Am I liable now because we have a wooden fence? I can't, if I put a iron fence in front of it, the wooden fence is still going to burn. They have a whole definitions about shrubs. Who defines what a shrub is and what's a hedge? I've got a hedge. Is a hedge a shrub? And definitions of how much spacing there is between the shrubs, which still, what is defined as a shrub? I got plants. Are those plants or shrubs? I called the company that I'm going to pay the $95 to say, hey, I'll pay another $95 to have somebody come out and tell me if I've done everything. We can't do that. We work for the insurance company. Well, if you work for the insurance company, why am I paying? Where do I get the guidance? I don't want to lose my insurance. I don't want to go on Fair Plan. Where do I go to find out what to do? Please, somebody.
So that is why, that is what the Safer from Wildfires thing is.
It's
So,
somebody cleaning out the rain gutters and breaking. I've done
no,
it.
it is, it's- yes,
This is
and it is
really
something,
specific.
yeah, and so it is, that is something very specific there that you can, that tells you very specific things that you can do. IBHS has provided some ideas
Is
on
there some
all of their
idea?
stuff.
I got 80-year-olds.
On that, the way that I know that people have done it and that we have been, I have seen personally people getting help with that is they have gone with their fire department and their fire department has helped to do that.
I've tried that.
To do that.
They're so busy.
I understand, and believe me, I completely understand that. Now, if the insurance company is asking you to do very specific things and charging you for this, if that is not something that was written in your policy to begin with and all that, contact the department, talk to somebody at the department, and they will be able to actually contact the insurance company for you, and then work with you and try to figure out what can be done there. That is, at this point, the one and only thing that we can offer is for the department to be able to work with you, and then they call the insurance company and try to work with you on that. And I appreciate the frustration because the insurance companies are coming up with all kinds of different things that you have to go through, and so it is important for you to be able to figure out, look at. This is the time to also look at what other options you have. We have our top 10 tips for looking for insurance. If you can't find insurance within your area, if you have to go outside of the regular insurance market, we tell people, if you have a really hard time with that, look for insurance companies that maybe are not in your area, like brokers that maybe are not doing business in your area. Maybe there is a broker in San Diego or in Sacramento who might have insurance companies that they're working with that don't have saturated books here in this area, and they might be able to give you a much better deal or much better rate in that sense. So we have just different tips like that you can look into. You can go into our website. We have different options that you can, different tools that you can use for that. But I hear you, and I understand. Right now, it's really a
Nobody's
difficult.
writing my
Yeah, in your,
Nobody. They haven't for
and
years.
so-
When we moved 11 years ago, Travelers was the only one. And, when did it all of a sudden become our area become wildfire? I mean, it wasn't 11 years ago, and all of a sudden it is. My house, 1939, the house across the street, 1919. Never burned down.
burned down.
It's those algorithms that you start
Yeah.
using, that's what it's all about.
Yeah.
So how do I get to the individual thing where they say, oh, you got a fire hydrant and there's the fire department?
And that is when we have the catastrophe modeling in place, then we will see that. Also, there was a question about, like everybody's going to have their own catastrophe model, right, to try to figure things out. The department has just announced this last earlier this month or last month, that we are working with Cal Poly Humboldt to come up with a model that is a public model to be able to oversee then all of the different models that people are using to make sure that we are being that they are being truthful. And also, that are going to be good for the consumer. So we are absolutely looking at all the other options to make sure that we are doing this correctly. And it's going, like I said, it's going to take a moment for us to get there, but we are working towards that.
So not only is he having a problem in the Oaks, we have a couple of people in the Oaks who just lost their insurance for getting an email based on this technology model that was discussed. That they just got an email saying that some sort of scan indicated their property was not good. If according to you, and there's no hostility with you, we are the #1 state in the country, then why are we not utilizing our consumer power as opposed to being pushed over by the insurance companies to force legislation such as the transparency issue that she's discussing? Because this state is going to lose gross domestic product as people move out of the state because they can no longer afford their insurance. I also want to know whether or not you guys have considered that since the city of LA is not permitting more development into these high-rise area zones of apartment buildings, whether or not developers will be required to prove that they can get fire insurance before they're allowed to knock down property and build something that might not be able to be.
Yeah, that is. That portion of this is there's those are local issues that I'm not exactly sure how that will work. So we are not necessarily involved in that. What we do know is that right now, people who are working on affordable housing are having issues with their insurance as well, and we're trying to figure out ways to make sure that they're able to provide the insurance to be able to create that housing. The thing is, we need at the end of the day, it's also local. We need to make absolutely sure, local folks are going to have to understand that you can't build in those places because you're not going to be able to get insurance.
But on the issue of the state component of transparency, are you guys not permitted to engage in legislation that requires?
In transparency, that's what we're working on right now. To work on, we're working on the regulations to make sure that we have all of that in place. Now, in regards to putting into that, and that is why we're looking at with the catastrophe modeling, being able to see those, and so that you are able to see the very specific parcel and see the fire hydrants, see the different things that you have done. Look at an entire community and see that the entire community has actually made strides to be safer. Right now, none of that is being taken into consideration.
In the hazard mitigation plan for LA, and I'm just concerned that insurance companies are going to determine what they think are catastrophes that aren't necessarily because they happen to appear in a public document about the potential. So there feels like your department, I don't know because I don't understand it completely, can indicate what the rubric can be as to how they are legally allowed to determine a catastrophe model. People that have bigger brains than I do, that have a lot more, involvement, they are working on all of that right now, and so we are expecting that we'll see
working on the
there.
transparency.
Working on the entire issue. So they are there is the whole issue of the catastrophe modeling, the whole issue of the reinsurance, everything. All of that right now, we have a plethora of not just lawyers, but scientists and actuaries who are working on all of those issues.
The catastrophe modeling that you're talking about, is that going to open up what the insurance company and third-party modeling is doing? And make that
in order for them
transparent?
to be able to use catastrophe modeling, they're going to have to share that with the Department of Insurance.
I'd love to jump in on that because that's definitely not how we read those regulations.
And it is not done. And
It's
that is
definitely
why-
not done,
and that is
but
why we're not.
Julia said one thing which we totally support, which is we need a public model in California, because if we build it, we know what's inside of it. We can say exactly what has to be disclosed, and we can say everything. And that means not only can you go to the website and punch in your address and find out what your fire risk is, you're going to know how it impacts your insurance rates, and you're going to know what you can do to change your risk. All of that is possible with the public model. My organization, many others have been pushing that at the workshops that the department has been holding, and we are really glad to see that the commissioner said that he's going to work towards building a public model. We will need legislative funding for that, so that's another step. But that also acknowledges that we need a public model because you can't trust the private ones because we do not know what they're doing. And the commissioner's regulation is very specifically created to get out of Prop 103's transparency requirements to protect the proprietary models of the third-party companies. And so do not expect that come January 1, when the commissioner's regulation is put in place, that you will now know what the model is doing, because you will not. There is one line in the regulation that says you must consider mitigation. That's it. They don't have to disclose what they're doing about mitigation. They might say, check, considered it, and move on. So none of that is going to clear up the confusion you all have about, is my house really that risky? Who's deciding it's that risky? What can I do to fix it? That is not going to be fixed with what the commissioner is doing. The public model will get us closer to that, and that's a really important change.
And how long will it take to get that?
And
Long time.
Right now, what we, I know when Florida decided to create a public model, it took them 5 years to put that together. That was Florida. We don't know what that looks like. But also, besides looking at the public model, the expectation is that if an insurance company is going to be using catastrophe modeling and reinsurance, they must get people out of the FAIR plan, and they must write 85% in areas of wildfire risk. And so when we are telling you that to do your part to mitigate your home, the insurance companies are going to be looking for what is that home that is safest to be able to go and offer insurance to them. So it is important for you to mitigate your home so that you are one of those homes that then is able to get insurance, and that insurance companies are going to be fighting to sell you insurance. So the expectation is, availability of insurance then is going to be a little, a bit more for the.
Yeah, I wanted to add a time dimension to this. We talk about mitigating the home. Some of the things that would be required are quite expensive. Yes. So we recently had to emergency replace our roof. We didn't do it with fire in mind because no one advised us to, et cetera, et cetera. So we replaced our roof, very expensive. So now we might be told you need to replace your roof again. Moreover, we need to saw down all our great trees, and we need to do all these. So all I'm saying is there a timeline is there a thinking about timeline? Like, you have this many years to show progress on, that would seem to be fair. I can change my driving behavior tomorrow, but I cannot reform the architecture and landscape of my home, that quickly.
Yeah, we don't have that in place. It is very much so just the more things that you do, the more that you should be able to get discounts for. So that's why there's several different things on each section. So that's the. And it's not going to be enough. Discounts are not going to be enough right now at all. The expectation is, though, that if you do your part and are as safe as possible, then that you will be one of those homes that you will be able to find insurance much easier than everybody else.
We now have forms in the real estate community. When we sell our house, they're fire hardening forms. They're just disclosures. They're not point of sale requirements yet. Mm-hmm. But there's been talk about that when homes are sold, that certain things will have to be done in order to mitigate those homes for fire for the future. We're not looking forward to that. At the moment, it's simply, when the house is sold, here's a disclosure that shows you things that you could do to help mitigate the fire risk on that property, and certain properties, depending on whether they're in high fire zones or low fire zones or whatever they are, have, are strongly being suggested that they do some of this, and in certain cases, in certain high mitigation areas, the fire department has to come out and inspect the homes prior to sale to see what's going on. But at the moment, it's all very foggy. There's no definitions about what to do here, where are the other places. So that makes it very difficult and frustrating for the homeowner, for the seller, because we really don't know what's required, what's not required, and even just to get someone out from the fire department to give us the inspection takes a million years. It's almost impossible. So again, when we list a property now, we say the first thing you need to do is make an appointment to get this person out, so by the time you're ready to close, you might have a report. So it's all very up in the air and very, very frustrating.
Yeah, no, absolutely.
I have a question. This is all very helpful. There's one thing that I've seen that I haven't been able to suss out anywhere. The wildly different amounts that houses in the same block can be charged. Our insurance went up 69% last year. My neighbors went up 2%. And across the street didn't go up. On the other side didn't go up. Neighbor on this side did go up. I can't make sense out of it. It's all the same neighborhood. It's the same block.
And that is, yes, and that is the big issue and that's why we're trying to find ways to figure out how can we make this more realistic for everybody, and the expectation is that when we do catastrophe modeling, that then we'll be able to see and have a more accurate picture.
But I don't understand, though. I don't understand, how can State Farm keep the same rate and say, okay, we'll stay here a little longer, but farmers can go 69% for you this year? How does that happen? I just don't understand.
Every insurance company has a different, they have not only different models, but they also have different risks. So like, remember I told you earlier, State Farm had 22% of the market. They have way too much risk in the state. You're still going to hear from State Farm that they're going to continue dropping people throughout for the next 5 years. They're going to continue dropping people because they have way too much risk in the state.
That's what I don't understand, though, because State Farm is not raising rates on my block.
So, and on your block, and but you know there might be in another place they might have. No, and it's no, but it's at the end of the day, every insurance company has a different, because of their risk is different, because they may have maybe 5 homes here and 20 over there. You know, that's the risk that they're looking at, and so their math, you know, is different. So that's why we really can't.
That is part of it, but really, this is what I was talking about at the beginning, the technology. This has dramatically changed the home insurance landscape in California in the last decade. Insurance companies are all using a different model. They all have different determinations of what the fire risk is, and they're all rating people differently. So what they're approving is catastrophe models to decide, oh, now insurance companies need $2 billion to cover California. Next year they're going to need 4 because the model says everything's so much more risky. But the models that they're using right now say your house is 10 times more expensive than mine. But Farmer's model says my house is 10 times more expensive than yours. And because those models are not open, even the Department of Insurance can't look inside them. We're stuck with this no answer.
So, and at this point, the insurance companies are not allowed to use catastrophe modeling. The way that we actually, for the last 30 years, the way that we have been looking at rates have been what did they lose for the last 10 years? And then looking at that, then that's how then we would decide, well, for the next 10 years, this is how much your risk would be. And so it never made sense the way that it was set up. Our entire system is really archaic. And so that's why we're working on this. Yes, sir.
Has a question.
Yeah, but he had it before. I noticed the...
Just theoretically, if I wildfire hardened my house to the nth degree and felt that there was no way it could burn down, or 99% chance it wouldn't burn down, am I allowed to not have fire insurance?
It is your call as a homeowner, if you own your home outright, you don't have, California law, you don't have to have insurance. But if you have a mortgage, they are the ones that require for you to have insurance. So it is your.
I'm curious about cancellation and lack of renewal, and I'm wondering, sometimes why they don't just outright say we're going to cancel. And what happened in my case is I have a large pine tree in front of my house. The insurance company sent out a photographer to take pictures. Then they told me I had to trim it. I paid $1,500 to trim it. They told me that wasn't enough. I trimmed more. I took pictures. I went through 3 rounds of photos, and the renewal date was coming, and they still would not give me an answer as to what I needed to trim. So ultimately, I found another. But in the end, it felt like they just didn't want to tell me they didn't want to cancel, that they wanted to cancel my policy. And as they're doing with you, coming up with a whole bunch of details that you can't really tell what's going on. Like I said, you just circle the branches you want me to cut.
I'm done with it. I hear you.
And they wouldn't, and the phone, I didn't have any luck on the phone. And so is there a reason why they just wouldn't say, we want to cancel the policy or find somebody else?
Yeah, one of the things that we're learning as we are meeting with people. I do want you to know that this last year we held 968 meetings, town halls, and events with people just like you throughout the state. And one of the things that we are gathering as we're having all of these conversations is very much so that insurance companies are just doing all kinds of different tricks to try to get rid of their risk. So my suggestion, as you are looking into renewing, it does not matter if you have been with this company for 30 years or 40 years and have never turned in a claim. They are not loyal to you the way that we are maybe loyal to a company. A company is not loyal to you at all. So what I suggest is every year, look at your policy, look at what else is available, who else you can go talk to, because you might be able to find something that is better suited for you. So even when you receive those. Now, also, one thing that I do want to remind you all is that when you receive those cancellation notice, you have to have by law 75 days for them to give you that time to look into it, try to figure out what the issues are. A lot of times when you receive one of those notices, if you contact the department, we will make a call on your behalf and try to figure out, okay, why is this happening? Many times they will say, oh, it's okay, we'll continue to cover that person.
Does that
So,
5 days even apply to non-renewal?
Yes, to non-renewals. And so it is when you receive those notices, that's when, I suggest, and I also suggest, don't think of calling the department if it is like next week it's going to be done. That's not going to be enough time for us to help out. It takes 21 days for an insurance company to be able to review a case and come back to the department and negotiate with the department. So I really, suggest that as soon as you get a non-renewal notice or anything like that, try to work with the department on that. Yes.
On the non-renewal question, could you speak to, I got bounced from non-renewal to, oh, we'll keep you, but we'll raise your rate 70%.
And that is, that is the prerogative. They can do that. Now, the thing is, what I said, it's contacted, I can't tell you enough, contact the department. We have the 800 number. If anything, they will know that you are actually looking and that you're keeping tabs.
I did that.
And so in that sense, at least, we'll be able to look into it for you. Yes.
I just want to go back to what this woman back there said, which is that if we are the largest, is this not negotiable with these guys that, if we spend the most money, is this not something that we can use as a leverage?
It is absolutely something that we have been using. And that is exactly what we have been doing. The commissioner is, that is his charge, to work with the insurance companies and work with the public and make sure that we have, and at the end of the day, the Department of Insurance is the biggest consumer agency in that sense, that we are absolutely looking at every option. Now, there are limits to what the commissioner can do, and that is why we work with the legislature. Now, the commissioner, when we brought up all of this, all of the different changes that we wanted to do and we work with, we did bring that up to the legislature, and the legislature did not have the appetite to do it, because at the end of the day, some people are going to get higher rates, other people, might not, and people don't want to be associated with higher rates, right? And so that was a loss for us. And so what we're doing is all of this we're doing under the authority of the commissioner. Thank you all very, very much for your time. Really appreciate you being here. Appreciate your feedback. Thank you.
Just me again, because I never shut up. Before you get all excited, I want you to know, let's stick around, let's chat for a bit, and get any last minute questions. Remember, the only thing I know about homeowners insurance is if you have a mortgage, if you want to refinance, if you want to buy or sell, you need homeowners insurance. So that's all I know.
Thank you.
Oh,
And I just wanted to tell everyone my website, it's consumerwatchdog.org, so if you have questions or want to reach out, please reach out.